Hello and welcome to the HOA Show, where we discuss the news, problems, trends, and critical issues relating to life in a homeowner association. Join us every episode, and together we'll explore how to survive and thrive in the dizzying world of HOAs.
Hello, and welcome to the HOA Show. In this episode, we'll be discussing water damage claims in condominium associations. I'm Ryan Gazelle, your host.
And I'm Tim Klein, and we're joined today by Steve Tinley from the Tinley Law Group.
Gentlemen, how we doing?
We're doing well, sir. Thanks for joining us. For more than 30 years, the Tinley Law Group has been devoted entirely to the representation of homeowners associations, condominium projects, and common interest developments throughout California.
Hey, that's just like us.
It is. Forgive me, Steve, but I got to know your secret. You don't look like you could have been doing this for 30 years.
No, I'm well preserved.
Okay.
Definitely well preserved. Actually, no.
Egg white omelets?
Egg white omelets entirely. Absolutely. Protein shakes, egg white omelets, lots of meditation all the time. No, actually, the firm was founded by my father, Rich, at the infancy of this industry. And I was fortunate. I came on board about 10 years ago and was given the green light to shake things up a little bit. And we're pumped. We had our 30th anniversary this year. It was a good time.
Congratulations.
Thank you. Thank you.
I understand that you attended both UCLA and USC. So
yes.
Years of therapy to fix your heart.
Exactly. Well, one thing it's allowed me, having experienced both schools, I can say definitively that USC is by far the superior institution. Sorry for all those Bruin fans out there.
This podcast is not going how I thought it would go.
No, it's not at all. And I know we're on Wilshire right now, right close to UCLA.
The belly of the beast.
No, they're both good schools. I was at undergrad at USC, and I feel like that's kind of where you make your family. So go Trojans, go Trojans.
All right. Let's get down to the nitty gritty. So we want to talk about water losses in condominium associations. You wrote what I think is an excellent article on the subject called Water Damage Claims in Your Condo Association back in June of 2018. I can't tell you how many times our office has passed that on to property managers, board of directors, all of them. It's just invaluable.
You know, it's great for us to have something from a third party that really kind of reinforces what we've been telling people all along with regard to these type of water damage losses.
Anytime
it comes from an attorney, it's got more gravitas.
Yeah, it should. No, the impetus for the article was interesting because I remember it was a week. It was in our office. We've got a dozen attorneys now, and it's always funny to see the types of claims that are coming. And I think at the time, there were 6 or 7 different associations that were dealing with water damage claims. And I was really surprised at how complicated these associations were making what I think should be a relatively straightforward process. Once you understand how the idea of maintenance responsibility is distinct from the idea of coverage, what the association should be doing, how the product of insurance really operates. So we decided to, invest the time and make the article. And I appreciate your support, giving it out to different community managers that can understand it. But yeah, it seems to be, for whatever reason, a topic that people get surprised to learn how simple it really should be. And I think a lot of times they're torturing themselves for needless reasons, especially when I see community managers basically be tasked with the idea of operating as an insurance adjuster, which I think is never an efficient use of time. So,
it's ironic. We call it a fire insurance policy or a property policy or a hazard policy. It's really a water policy. I mean, we're in this time in our development of condo development, these projects are getting older. Galvanized pipes, typically, sometimes copper with pinhole leaks. But the infrastructure needs to be addressed, and it's not being addressed. There's been so much deferred maintenance that we're seeing so many water claims that's all we're dealing with.
And you almost never see these pipes as a reserve item, which is shocking.
Yeah, that is really surprising. Well, the idea is, one is a pipe within a wall, the association responsibility. So just having to deal with that, it's been an interesting thing. I think a lot of associations, for whatever reason, were operating under the assumption that, hey, if a pipe just serves a homeowner's unit, regardless of where that pipe is located, that's the homeowner's responsibility, which isn't the case. So I think associations, a lot of the time, were looking to guard against having to repair and insure these items. And while they were doing that, they were running into situations where actually they were spending more financially over the period of 2 or 3 years than if they had just accepted what the situation should be and budget and adjust the repair policies accordingly.
That kind of brings us into, you had laid out the article kind of in 3 distinct sections. So I thought maybe we'd kind of address each of them and then discuss in detail.
Yeah, absolutely.
So first you had the maintenance and repair responsibilities, then you had kind of fault versus coverage, and then finally the water intrusion policy. Mm-hmm. So why don't we start with the maintenance and repair responsibilities? Why is that important, and where are they going to find that information?
So we're talking about in the context of condominium developments here. So, right. In our experience, virtually every condominium project that we get to work with is structured as an airspace condominium project, right? Where the separate interest, the unit that's owned by the owner, is essentially a block of airspace, and it's bounded by interior finishes. So the owner owns up to the paint on the wall. But once you get into the drywall, and certainly once you get into actually the plumbing components inside that wall, that's outside the boundaries of the unit, and that is a common element or a common area component that the association is responsible for unless the CC&R state otherwise. There was, when I first came in the industry about 10 years ago, I was surprised. We had clients come with us, and for whatever reason, their prior counsel had given them this mindset that, well, if a pipe within a wall exclusively serves or only provides water to that one unit, that is an exclusive use common area component. And I felt that that was a real, a less sophisticated or liberal interpretation of the code. If we are going to have homeowners maintaining common area components, let's look at how the code treats those. These are balconies, these are patios, these are porches, things that a homeowner can access. Do we want homeowners piercing into walls, piercing into a tension slab subfloor in order to make repairs? No, that just logically, that didn't make sense to us. And in fact, I think there was a 2010 or 2012 case, the Dover Village case, where the court finally looked at this. And in that situation, a homeowner had a sewer backup. And they said, hey, the sewer pipe, even though it's within the slab, because it exclusively serves your unit, we're going to make you as the homeowner responsible for it. And as a result of the lawsuit, the court said, no, that's ridiculous. Exclusive use common areas are places where homeowners can access. They don't need to tear through walls in order to sweep off their balcony or paint their door or so on and so forth. So it's a common area element. So in the wake of that case, it's really helping homeowners understand that what the association maintains and repairs is not everything that you think just serves the unit. Once you get outside the boundaries of the unit, into walls, into floors, that's usually an association responsibility, unless the CC&R state otherwise, and they rarely do. So understanding the boundaries of what the association maintains versus what the owner maintains is important for the association. But even when the homeowners association has an obligation to maintain that element, insurance operates an entirely different way.
You know what I think is interesting is we commonly get claims on multi-floor projects, kind of an elevator style project where the water loss starts in 406, goes to 306, 206, and 106. Well, if it's just between two units, I've had managers say, well, that's just a unit to unit dispute. There's no really responsibility we have. And I said, well, how did the water get from 406 to 306?
I know.
Oh, no, we're not worried about that. Well, I'm worried
magically.
about that.
Yeah. It magically, somehow the water
bypassed all common area.
Yeah, exactly. So the ceiling and the floor that separates 206 from 106, right? We're just going to pretend that doesn't exist.
Right.
So the association isn't involved. And again, that's a problem.
We figure 96 degrees, sunny Southern California day, water in this vacuum of a cavity, 3 days is going to be mold.
Yeah.
Absolutely. There's going to be mold and they don't want to deal with it, right? And then we know we have these exclusions and these insurance policies, right, for the sudden accidental and so on and so forth. So.
And who's really going to be dealing with that? It's going to be, call my brother Joe over and we're going to fix it ourselves in the wall and get in there and make a mess of it. And we're not going to address all the mold that just grew because we don't want to touch it. Yeah, well, and that's the surprising thing. So we always tell our clients, listen, in the event of a water intrusion issue, before you start trying to allocate blame or fault, go in there and fix the problem, because the association's responsible for these common elements. Do we want to leave it to a homeowner and whatever plumber or non-plumber that they hire to go in there and start making repairs to our subfloor and doing mold remediation? No. These are the type of fact patterns that plaintiffs' attorneys salivate over. Because then there's the emotional distress, right? There's the health exposure. Oh, they were exposed to mold and so on and so forth. Get in there and clean it up, file a claim on the policy and deal with it later. But when there's water leaking, the first job is not just to point fingers at everybody. It's to stop the water from leaking. So let's kind of, for the purposes of the pod, just take one core example. And you used in your article, the standard toilet situation where you've got the pipe, bringing the water through the wall, and then into the supply line that goes into the toilet. So essentially, the pipes in the wall, like you said, are the responsibility of the community association.
Exactly.
If that pipe fails inside of the unit where the supply line connects to the toilet, that's going to be a unit owner responsibility.
Absolutely.
In general.
Yeah, exactly. So again, it's within the airspace. So if it's something that the owner can touch and maintain without having to pierce through a wall or pierce through a subfloor, that's how you know you're within the boundaries of the unit, right? So the P-trap or the toilet supply line, those are perfect examples of something that, yes, that is what the owner is responsible to maintain, repair, and replace. The second we get inside the wall, though, the pipe that actually provides water to that toilet stub out or to the P-trap, that's how you know that you're actually in common area land now. That's something that the association is responsible for.
And that'll lead us into the next section, which is fault versus coverage.
Yes.
So let's say there is that water loss. The loss occurs. It was determined that the fault was in the supply line. It's inside of the unit, an element for which the unit owner is responsible. What would you caution boards against doing next?
So this is the type of narrative that I typically hear from the association's elected leadership, the board of directors. And I think they don't really understand the nature of the insurance product and who the intended beneficiary of this product is, because that's what it really is, right? Insurance is a product that mitigates risk for the association. We purchase that product, especially for the types of risk that we can't mitigate through other means. So just because, and this is the issue, just because a homeowner is supposed to maintain an item, let's say in this case it's the toilet supply line, and that fails. Well, we are operating under a walls-in policy, for example, right? The association's insurance carrier provides coverage not only for damage to the common area, but to the interior of the unit. The elected leadership, the board of directors, and the community manager might say, well, why should we file a claim against quote unquote our policy, meaning the association's policy, when it was the owner's fault? It was their supply line that failed. And then I have to turn and say, okay, define what our policy means, the association's policy. How do the premiums for the association's policy get paid? Where do you get that money? We get it from the assessments. Well, who's paying those assessments? The homeowners are. The homeowners are paying as intended beneficiaries of this policy. So regardless of whose quote unquote fault it is, in our experience, I think you gentlemen would agree, from the carrier standpoint, they don't care necessarily when they're adjusting the property loss whose fault it is. They only care about whether or not the product that was purchased by the association provides coverage for it. So if the homeowner was a bonehead and didn't maintain their supply line, or let's say they were doing a bathroom remodel and did something wrong, and now there's a claim, the association cannot justifiably, in my opinion, deny the owner the benefit of that insurance coverage that they've purchased through their assessments.
Right. There is no stupidity exclusion.
There is no stupidity exclusion. Well, I mean, I guess in some respects there is. But from the board's standpoint, they sit there and say, well, why should we file a claim on our policy? What do you mean by our policy? It's everybody's policy. And if there's coverage, there's coverage. We cannot deny a homeowner, regardless of how dumb they are, right, or whatever they did to cause the loss. If they have coverage, if they have a benefit from this product, we can't legally deny them the benefit of what they've paid for.
It's so interesting, though. The board members sometimes get elected because they want to become the gatekeeper. They want to make sure that those claims don't get submitted under the master policy. And we say, again, they have helped pay for it. They're entitled to the coverage. And, and it's really patently unfair to not allow them and presents a liability exposure for the board.
Yeah, absolutely. Do you ever have experience? Let me just ask you this, gentlemen, where the board will be and they say, no, we don't want to file a claim, and the carrier will listen to what the board says?
Well, no, the carrier does not listen to what the board says. Thankfully, because we like to tell them, a property claim is finite. You know how much it's going to cost to repair that kitchen, to repair that bathroom. But a liability claim is not finite. And that'll kind of lead us in, why could that lead to a liability claim?
Well, it could lead to a liability claim if the association then was negligent by not tendering the claim and not letting the association's carrier step in and actually perform the repairs. So there are situations where, liability might come into play if the homeowner was negligent, but that's a secondary issue from the standpoint of a property damage policy, at least to my understanding.
But even beyond that, I guess my point was that, if you prevent the unit owner from collecting on their own personal lines insurance, then you could end up with a liability claim because you're preventing them from collecting under the first party property law.
Absolutely. So, when I was first in the industry, I saw this less. I'm seeing it more now because we're seeing these personal lines carriers that are getting more savvy. So community managers that are listening to this right now, they might have dealt with a situation where there was a loss damage was sustained to the homeowner's unit. And we tell the homeowner, no, file a claim with your individual lines, your personal lines carrier. And they say, no, the carrier is not going to step in and do anything because apparently they say our association's carrier is quote unquote primary. What does that mean? Well, it means that the association's policy is supposed to be used first, right? Especially under a walls-in situation. So if the personal lines carrier of the individual homeowner, they're getting more savvy now, they're saying we're not going to step in because our insured, this homeowner, is paid assessments towards the premiums on the HOA's policy, and the HOA's policy is supposed to be used first. It's primary. If there's anything that they do and there's money that's left over, there's repairs that are still need to be made, that's the point in time where we as the personal lines, the individual line carrier will step in and help our insured. But the association's policy needs to be involved.
We think there's such a better way to address this exposure, and that's by managing it with a higher deductible. Rather than being a gatekeeper, manage a higher deductible and have a deductible handling procedure that really determines when and where the unit owner will be responsible for the deductible.
Yeah, that's part of the water damage procedure policy that we'll get into. But, we get the question a lot, what does that mean that it's primary? Who decided that? And
the pressure actually became from the lenders in the 70s and early 80s.
Right.
Fannie Mae, Ginnie Mae, Freddie Mac, all three were really concerned about making sure that there was some coverage protecting their collateral that they were lending on. And so they determined that by making the master policy primary, they knew that policy was going to have to pay first. And if there was an HO6, and by the way, for years, they never even relied on the HO6. They didn't even know if their lender was, or their borrower was getting coverage for the individual unit. They were relying on the master policy solely for their collateral. And for that reason, they had to have it primary.
Yeah. So just back to your initial point, Ryan, the idea of maintenance responsibility versus insurance coverage. When you're in a water damage claim scenario, who's responsible for what really doesn't matter. It's whether or not there's coverage for it. So if the homeowner was at fault, if the association was at fault, that's immaterial from the standpoint of actually filing the claim initially. The carrier is going to take a look at what the situation is and to determine whether or not there's coverage. And that's why I think that a lot of HOA insurance policies are being underutilized. A lot of times, I think, for fears by the elected leadership, the boards of directors of these associations that are unfounded. And I think a lot of times they do this. Hey, we don't want to file claims on our policy because we're worried about increased costs of insurance. So instead of us filing a claim, what we're going to do is we're going to step into the role of an insurance carrier and start having our community manager go out there and make repairs to individual units, which in my experience makes the association spend multiples more money than they would if they were actually using their insurance policy the way that they should.
And then if they're acting as the carrier and they're granting coverage to one owner and not the next door neighbor for the same reason, you can get into a whole nother kettle of fish.
Absolutely.
Now let's take that same loss scenario though and say that the pipe inside the wall broke. All right. So the pipe inside the wall breaks. That's the HOA common area. They're required to maintain, repair, replace that. They submit the loss to the carrier, but for whatever reason, the claim is denied. Should the association automatically pay to repair the unit owner's property? That's
a great question. And I think my answer to this might ring true with some people's perspective on this. Some people might have a different feeling because they just look at the equity and the emotion of it. It's very difficult for the association to guard against potential water damage claims, right? To say that the association was at fault. Well, let me back up. This is the premise. If the pipe in the wall is something that the association maintains and repairs, it's an association component, and that thing leaked and it caused damage to my unit, the association then has to make me whole, right? It has to not only fix the leaking pipe, but it has to restore all the damage that was caused to my unit. After all, it was quote unquote your pipe.
Pay for you to live somewhere else while it's being fixed, etc.
All that good stuff, exactly. And if you were to accept that, the idea is, okay, well, to accept that understanding, that proposition, then you would basically be saying that the association was negligent. It breached its duty. I could see if an association is doing some plumbing work and it sends its vendor in there and the vendor causes a problem, yes, there's actionable negligence, right? But a deteriorating piping infrastructure fails, not through any fault of the association. And what's the alternative? Are we to tell the homeowner, yeah, it's our fault because we should have adopted some sort of scheme where every 3 months or 6 months we go inside your unit, punch a bunch of walls in the hole, look around and make sure everything's not leaking and then seal the thing back up? We can't do that. So the only way that we can guard against this risk is through purchasing insurance. If insurance is available, we're going to utilize that coverage that's available. If it's not available, what then? Do we as an association step in and fix your unit? My position is absolutely not. You as a homeowner are obligated to maintain and repair your separate interest, your unit. We're obligated to maintain and repair the common area. That's what we're going to do. If there's insurance coverage that's available, we'll utilize that coverage. But if it's not available, it doesn't mean that the association now has some compassionate or ethical obligation to basically fix your unit and go in there and do that. That's you as an individual owner's responsibility. And that's why you as an individual owner should purchase insurance covering everything that the association's carrier doesn't insure.
I don't disagree with that set of facts, but there are circumstances where boards just frankly are being negligent, where the plumber has said the water pressure coming in from the street is just way too high for this building. We need a pressure regulator. or these risers are failing regularly. We need to replace these risers, and the board doesn't take the action to do that. Similarly, on the solid waste side of the equation, if they come in and say, look, we've got a tree root issue and we need to be aggressive and do it every 4 months, and the board says, no, we don't have that in our budget. We'll do it when we get to it.
Yes.
I mean, those type of scenarios I have seen played out. And in those circumstances, I feel like the board really is responsible for maintaining the issue and for dealing with the deductible. I do not think they're responsible for putting the owner out elsewhere.
Oh, for paying for relocation costs? Yeah, the problem is, and I get that, right? Because now it's not necessarily a property damage claim. It's more of a liability claim. The association's leadership did breach a duty because it was on notice. It knew that these pipes were leaking like a sieve, and we should be doing a repipe project, but they've kicked the can down the road.
They just didn't take reasonable steps.
Exactly. So in order to settle or to mitigate a potential liability claim, yes, the association might step in and agree to do something. The situation that I see play out, though, that ends up acting horribly is where the association says, okay, we'll step in and we'll repair the unit. And even in the case where the association should assume some responsibility, maybe you might pay something to the owner, just like an insurance carrier would. We're going to pay you something in exchange for a release. What they do instead, and this is where I think is just a monumental mistake, is they go in there and say, no, we're going to have our vendors, the association's vendors, go in there and start repairing or replacing the flooring. And that never works out well, because once the homeowner starts having their flooring replaced, all of a sudden, in our experience, they leverage that into getting their entire unit remodeled. And now you're putting your association's managing agent and an attorney in a position that they never really should have been to begin with.
Which brings up an important point. I think that they should never admit any kind of fault.
No.
Only the adjuster can make that determination. Don't admit any kind of fault. Just collect the information, send it on to your insurance broker. Let them submit it to the carrier. The adjuster will make that determination. And two adjusters could have a different determination on the exact same loss.
Yep, they absolutely could. So yeah, in the rare minority of situations where a board has been negligent and you want to guard against a potential liability claim, yeah, the association might have to do something. But your general run-of-the-mill tree root intrusion or water damage claim situation, just because there's no insurance coverage or because a claim isn't filed, I don't think that the association should step in and start acting as an insurance carrier and say, okay, now we are going to, for our own good motives or well-intentioned beliefs, that we're going to fix your unit, homeowner, because we feel sorry for you. I think that is honestly a monumental mistake. It usually plays out very poorly.
That kind of brings us towards, I think, the most important part of your article, which was the water damage procedure policy. You called it a water loss policy or water intrusion policy. I think that maybe gets a little confusing when we're talking to our clients, just because we're talking about insurance policies.
Yeah.
So I like to call it a procedure, water intrusion procedure maybe. What is it that you recommend to put in that, and how do we make it the most effective it can be?
Yeah, absolutely. So I get it. The idea of policy is a little confusing, because once you start speaking about insurance, you start thinking, oh, is this another insurance policy? Is this another product that we're purchasing? We call it a policy, but it's basically a set of operating rules and regulations. And the idea behind this is, let's disclose to the homeowners what the association's insurance covers versus what the homeowner's individual insurance is supposed to cover, how community management and the board will address water damage claims, basically an entire set of procedures that are put in place in order to put notice on the homeowners, and there's a variety of benefits in doing it. The first and foremost one is, okay, how are deductibles treated? So let's say we have a $20,000 loss and there's a $10,000 deductible. So we're going to get $10,000 back from the carrier. So the association says, okay, we have $8,000 worth of common area damage, and it uses $8,000 to fix the common area damage, and there's $12,000 left of individual unit damage. But we only have $2,000 of money left because that's our deductible. Who's making up for that remaining 10? I very rarely, except for some communities in Northern California, have seen sets of CC&Rs that address who is supposed to eat the deductible. So one of the things that are in this water damage policy, let me just call it a water damage rules, in these water damage rules, right? How do deductibles get allocated? Some communities treat it differently. We like to have the association either have all of the deductible allocated specifically to the homeowner. The homeowner has to come up with the remaining amount of money, or find some equitable split depending on where the loss emanated. The reason for that is, at least in our experience, we find that if the deductible is passed on to the homeowner, the association has one insurance policy, right? This master policy. Once that's been utilized, there's no secondary policy that the association can go to. But in the hypothetical that we were discussing, right, the homeowner says, I have 12 grand worth of repairs I need to make, but there's only $2,000 left from the association's policy. At that point, they can then go to their personal lines carrier, right, who would then step in and provide the secondary funding that they need to make the unit whole, less the homeowner's insurance deductible, which is smaller. So because the homeowner has a secondary policy to go to, that's one of the reasons why I like pushing it off onto the homeowner.
There's a couple of interesting factors that make that difficult for me. One is that there's something called Clue, which is this reporting system that personal lines folks use that basically records water damage losses that occur in units, and it goes from owner to owner. So even though there may be a change of ownership, the fact that there was a water damage loss on that
it doesn't stay with the house.
It stays with the property.
It stays with the property.
Right. So
okay, not the individual.
So getting back to my example, 406, 306, 206, typically there's no damage in 406.
No, exactly.
Right. Which could be the negligent party, right? They could have left the toilet or the tub running while they took a phone call, which we've had some folks do their own plumbing repairs. I mean, these kind of losses where it's clearly the unit owner's negligence, but the damage occurred to the four folks below them. Mm-hmm. How do you address that type of clause?
Well, my thought would be in these water damage rules that the association has, right? Because the association needs to fix the common area. The insurance proceeds that are given first get used to fix the common area. And what's left, right? There's got to be some form of equitable allocation. So maybe in that circumstance, the association's counsel does have to be involved and say, okay, the non-negligent parties get paid first.
Right.
And the negligent party is the one that gets left to eat the most of the deductible, and they need to talk to their individual carrier to deal with it.
I think the interesting thing about this is that the court system, particularly small claims, could probably resolve the inequitable parts of it. I mean, we've seen some claims where the unit owners get split the proceeds, even though the unit owner above was really responsible for the loss. Mm-hmm. But the unit owners below took them to small claims court, or their individual unit owner policy decided to subrogate against the owner upstairs in order to make it more equitable.
Mm-hmm. And one interesting aspect of this is, you've mentioned before, Tim, that not every individual unit owner policy will pick up that deductible. You might have to have a specific rider attached to your policy. Your carrier might exclude it entirely. So you got to make sure you talk to your personal lines agent and make sure that if you are held responsible for that deductible, or if you're not, if you're held responsible for that deductible, that your policy would indeed respond.
Which is why I like Steve's proposal, and that is every owner will know in their association how that $10,000 or $15,000 or $20,000 deductible is going to be handled, which is a real gift because it's not always clear. If particularly the CCRs are silent.
Well, the gift of that, by having this memorialized in our water damage rules here, I think it's actually provides the most benefit to a unit owner who's affected, because now there is a governing document, because this is a rule. It's a governing document of the association. So when they're fighting with their own individual carrier, all they have to do is point out, this is a governing document of the association that talks about how these things are supposed to be dealt with. When I purchased this insurance product for you, I gave this to you and said, this is when you're pricing and you're developing the product of insurance that I'm purchasing as an individual unit owner, it's incumbent upon you as a carrier to make sure, and you as a broker or an agent to make sure that I'm adequately insured. Here it is in black and white. Tell me what the problem is. Same thing in the situation where an association levies a reimbursement assessment. And this is another really important factor of the policy. I don't think there's enough knowledge or enough awareness of this exclusion that we've seen rear its ugly head, where typically a carrier will say, yeah, we will cover damage from water intrusion that is sudden and accidental, occurring over a period of not less than 14 days, right? So we have a slow leak, or we have a leaking refrigerant supply line, or a leaking,
not more than 14 days.
Not more than 14 days, exactly, which means that we'll cover a leak that happens, it's sudden and accidental, but if something's leaking over the course of months, there's not going to be any coverage for that.
Which is not the carrier trying to be a bad guy. They just want you to have some skin in the game and pay attention.
Absolutely.
If you see that the ceiling is sagging, say something.
Say something, right? Because the amount of money that it would take to fix that problem is infinitely smaller when it's addressed in week 1 or week 2 rather than month 2 or month 3 or year 2 or year 3. So in those situations where we have a homeowner, or more commonly what we see, there's a tenant in the unit, right? And they're seeing, they're just sitting back, and for whatever reason, who knows what they're doing in their personal time, but they think it's funny or entertaining to watch mold grow on the wall. And we've had cases like this, right, where a relatively small damage claim that could have been resolved for a few $1,000s is now tens of thousands of dollars because of all the structural damage that has been done. There's no insurance coverage for that because it's not sudden and accidental. So this is a nightmare situation for an association because they want to tender it to their master carrier, and they say the exclusion's triggered here. We're not providing any coverage. So now the association wants to turn around and tell the homeowner, well, we're going to have to levy a reimbursement assessment against you or a bill back assessment against you because there's no insurance coverage and we have $60,000 worth of common area damage we need to repair. And then the homeowner turns around and says, well, tell me where it is that I was supposed to notify you immediately. What was it that I was supposed to do? I don't understand. You can't just make this decision. And that's the water damage rules that we draft. That's a really important section. It lets homeowners know you have an obligation to immediately notify the association's managing agent of any perceived water intrusion issues. If you don't, and as a result of that failure, we incur damage or there is no coverage, we're going to levy a reimbursement assessment against you. The nice thing about that, if the association were to go and to do that, and now the homeowner, again, this is in our experience, and you gentlemen are the insurance professionals, but at least this is how I understand it, how it's worked out. The homeowner gets hit with this $60,000 reimbursement assessment, and they tender it to their personal lines carrier. We've had carriers say, well, tell me where it is that our insured, this individual homeowner, breached some duty, where they were negligent, and this is where the situation of fault comes into play. Where they breach some duty to the association, we give them that set of water damage rules and say a governing document of the association required your insured to notify us immediately or to make sure that their tenant notified us immediately. Because they didn't do that, they were negligent. They breached a duty. So you as a carrier need to step in and pay this reimbursement assessment on their behalf.
You know, the challenge, unfortunately, for this particular special assessment is the potential that the HO6 will have the same 14-day definition of a leakage and seepage claim. That is to say that the nature of the loss assessment coverage for many carriers is defined by the perils that they're insuring on the HO6.
That's interesting.
So if the perils insured on the HO6 have a 14-day leakage and seepage exclusion, I'm wondering if a savvy adjuster is going to try to deny the claim by virtue of the fact that it's an excluded loss under the HO6.
So you're saying the actual liability coverage that they provide to their insured is tailored and basically says we'll provide liability based upon the property damage?
Well, remember, this liability is unusual because it's not liability, personal liability for things that are within their home ownership, maintenance, and repair. It's something that the corporation is responsible for maintaining, and they're responsible by virtue of your rule for this payment of the special assessment. So it's an unusual liability exposure because it isn't covered under their GL coverage. It's covered under loss assessment. And the nature of loss assessment coverage with many perils, many carriers, is to point to the perils insured. So fire, explosion, wind, hail, aircraft, bodily injury, personal injury. But there may be the same exclusion on the HO6 as on the master policy.
Well, even if that's the case, then I guess that's the situation for the homeowner. You know, that's their problem.
Yeah.
From my standpoint, as corporate counsel to the association, we need to make sure that the rest of the homeowners are not subsidizing the negligence of a homeowner.
I don't disagree. You know, this all came out of Texas with these terrible mold claims, and then the court basically said, you know, the first day the water damage was only 25 cents. The next day it's 50 cents. The next day it's $1, and it gets exponentially larger. So after 2 weeks, there's a lot of damage that can occur.
Yeah, absolutely. So, you know, how do you notify your homeowners? And we tell them, we put them in the policy, give this to your individual insurance agent or broker, make sure that you're adequately insured because this is the type of risk and this is how we deal with things. And the benefit of that, so our firm is a big proponent of what we refer to as policy-driven governance, right? And again, I don't want to conflate the term policy, but rule-driven governance, right? And we use policies. You know, we have neighbor-to-neighbor dispute resolution policies, balcony and deck maintenance care policies. And the idea behind that is, you know, as the HOA industry evolves, and I mean, even with the new legislation, every year there's new bills, right? So it's becoming a far more sophisticated endeavor to really run these common interest developments. And when you have elected leadership, these homeowners that come aboard and management companies change, attorneys change, I think the best thing that the board can do is really endeavor to say, we understand the menu of situations that we deal with. We need to take the time to actually put pen to paper and memorialize a set of guidelines as to how we deal with each of these situations, whether it's a neighbor-to-neighbor dispute, a water damage claim, a balcony damage claim, so on and so forth. Because when that situation happens, you're not left guessing and digging through records. You have an adopted policy that's on the books that's basically, this is A to Z how we deal with things. And unfortunately, the nature of the legal environment that we're seeing without that type of policy, If an association differs or maybe the board makes a decision that's justified, we have homeowners now that are looking for any excuse. Well, you're not giving me the decision that I want because of my skin color or because of my religion or my race or so on and so forth. It's so fortunate, we find, and it's so valuable for the leadership of these associations to say, all that's nonsense. We're volunteer homeowners. All we're doing is following protocol. This is what the protocol is for our community. This is how we deal with a water damage claim, right? That the claim is well below the insurance deductible, so we're not going to file the claim. We're not going to fix your individual unit. That's your responsibility. This was a rule. This was disclosed to you. This was given to you by a managing agent at least once a year when you purchased your property. It's valuable. In fact, it's probably better for us as attorneys if we didn't advocate this approach, because we'd have our clients calling us a lot longer, or, you know, a lot more often. But
and it's an inexpensive, relatively easy thing to
It's
enact.
A relatively straightforward
Best
thing to do.
practices, why not?
Yeah, it's a guideline. It's a rule. It's a framework.
I think the challenge, is making sure that homeowners are educated about this, because just like the higher deductible itself, if you have that higher deductible, you got to make sure the individual homeowners realize that they need loss assessment coverage at a prescribed limit.
Yeah,
and coverage for the master policy deductible. I mean, loss assessment policies are issued with only $1,000 deductible. That's just not enough. $1,000 limit, and that's just not enough coverage
for the loss assessment insurance. So you're describing when a homeowner gets a reimbursement assessment levied against them. Correct. There's only $1,000 worth of coverage that's provided by the carrier.
Many times that's how the loss assessment limit is issued. And so there are carriers like State Farm, for example, that pick up the master policy deductible under their loss assessment as it defined as a coverage under that loss assessment coverage. So there's an opportunity there to really address both exposures.
Yeah. But every carrier is going to be different.
But every carrier is going to be different.
Talk to your personal lines agent
and educate them
about this specifically. And hopefully you have this rule provided to you by your property manager or your board of directors advising you of what your potential could be, your potential
I can understand your gentleman's frustration, right? Because I think more and more, especially with these property damage claims and these liability claims, they're being driven by insurance concerns. And there's a legal component to it as well. And I think that a lot of boards and a lot of homeowners fail to recognize the important role that both insurance and legal do for an association in terms of mitigating risk. That's essentially what we do. Any corporate legal counsel for an association, our job is to mitigate risk. Same thing with when you're pricing out insurance and you're developing insurance policies. How are we going to mitigate this risk? How are we going to price this risk? So it's really important for both insurance and the legal aspect of the corporation to be speaking and singing with the same voice, which is why I think when you go through these policies, it's not just doing more renewal, we're going to price our insurance, we're getting an insurance policy. Okay, but in the event we actually have to use our insurance, how does it get used? How do we deal with all of these different hypotheticals? Do we need to increase our insurance deductible? I'm sure you've seen this as well. A number of communities, right, they get concerned about the fact that we have a lot of water intrusion issues. So in order to get around filing claims, we're going to do, a number of things. Sometimes what they do is say, we're not going to file claims anymore. We're just going to fix these things ourselves and fix the damage to the individual unit interiors ourselves, which, as we discussed before, I think that's just an absolute mistake. Or the second thing, what we're going to do is we're going to jack up our deductible. So they might go to a $25,000 deductible. I have one community that's at a $50,000 water damage loss deductible. And I don't think boards understand that basically what you're doing is you're removing your insurance. You don't have any insurance. So if you have a $40,000 claim, there's no insurance for that. So whether you're paying insurance premiums or heightened insurance premiums, or you're paying out of pocket because you're fixing these things themselves, inevitably you're going to pay for it. And the job for the leadership of the association is to say, well, what's the most efficient use of our money? Should we have a national insurance carrier that we can utilize to adjust these losses and make sure the repairs are done as efficiently as possible? Or are we going to self-insure and take on the task of fixing these things ourselves as they come? And just based on the numbers, I tell my boards, I don't think as good as our community managers are and as good as you as a board are and whatever you're experiencing construction or insurance, I don't think you're going to be able to fix and adjust a loss more efficiently than Farmers Insurance is going to be able to do it, or another national insurance
But in
carrier.
some cases, we're seeing now, as Tim mentioned earlier, we're at kind of an age where so many of the homes in Southern California were built in the 50s and the 60s and the 70s, and now those pipes are at their breaking point. We're seeing more water losses. So if you have a whole lot of water losses, the carriers look at frequency, they look at severity. If you've got a whole lot of frequency or a whole lot of severity, then you're going to get non-renewed. And, there may not be an option to get a lower deductible out there. you might have to kind of self-insure with that $25,000 deductible for a year while you really focus on cleaning up those pipes and replacing those pipes.
That's the bigger issue, right? If you're having insurance,
it's a Band-Aid.
If you're having issues getting renewed, or you have to jack up your deductibles and do these things. I mean, we've had a number of communities where we say you need to repipe the project. You need to repipe the project. A homeowners, and this is, goes to the core of understanding what a board is supposed to do. And I think now the industry is actually turning, and I think there's more people that are willing to embrace this concept. A lot of communities that will work with the board, they come in. What's your job? Our job is to make sure that dues don't get increased, right? Assessments don't increase, right? I see that kind of actually going out the window now. No, your job really is to maintain assets. That's what any job of a common interest development is to do. So if you have a failing plumbing infrastructure, your job is not to say, okay, what are the ways that we can do to make sure that we still have insurance, right? So let's try to find all these Band-Aid approaches. No, your job is to maintain assets. If you have an asset that's failing and deteriorating, you need to replace the asset. And it's easier said than done, right? We have to go through a community-wide repiping project, but there are ways to phase that in. I don't think the answer is to sit there and say, no, we're just going to pretend the problem doesn't exist. Now you're in the land of negligence, right?
Right.
Right, where you have a homeowner that's really badly injured because of a water damage claim, and you say, well, we're not fixing your unit. That's your responsibility. You guys have seen 20 pipe leaks over the course of the last 3 years, and you've done nothing about it. You were negligent in this case. The association is at fault, right?
And you're not a good bet for any insurance carrier.
Exactly.
They're out to make a buck. They're for-profit companies. It's not a God-given right that you shall have insurance.
I remember I was dealing with one community. This was a year and a half ago. Really nice group. And like any volunteer board, they're trying to do what they can. They don't get paid to do this, right? And there's got to make a significant
Wait, they don't get paid?
They don't get paid. They don't get paid to do it. No, they don't. They understand that, and they say, hey, this is a challenge, right? We have to go through a loan or special assessment. This is just too big of a bite. We don't want to deal with this. So instead of doing a community-wide repiping project, we're just going to build in a water damage repair line item into our budget, because we don't have $1 million right now to repipe the project. So what this community did is they inevitably ended up being a $200,000 line item into their budget that they were incurring year after year after year over the course of 8 years. So they were dealing with this nonsense over 8 years, spending at least $1.6 million, when if they had spent $1 million repiping, right, their insurance premiums would have gone down, people wouldn't have been adversely affected, and so on and so forth. So a lot of times, it's the more difficult thing to do, but it usually is the right thing to do. If you know your community has failing pipes, you have to deal with the problem and not just address the financial symptoms of it.
So Steve, how can our listeners reach you if they're interested?
If they're interested in working with us, well, we have our websites, tinleylaw.com or HOAlawyers.com. We publish a ton of information.
You have a law blog on there as well, right?
Yeah, there's a blog on there. We also have an online law library at findhoalaw.com. There's information, about insurance and things along those lines.
Well, thank you so much for coming out today. This was fantastic.
Guys, this was fun. This was great. I appreciate it.
We'd like to thank Steve Tinley for donating his time today. And as we end our episode, we'd like to remind our listeners that if you have any comments, questions, or suggestions for topics that you'd like to learn more about, you can email us at feedback@hoashow.org. Join us next time on the HOA Show.
To share or subscribe to the HOA Show, visit us at hoashow.org. There, you'll be able to listen to other episodes, find helpful resources relating to HOAs, provide feedback, submit questions, and check out other great stuff. The HOA Show podcast has been made possible by the contributions of Klein Agency Insurance Brokers, leaders in the community association industry. The views and opinions expressed by the podcast, its presenters and guests, do not constitute legal advice. For more information on how the topics in discussion apply to you, please consult with your own legal counsel.